And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. I'm going to give you the best news on crypto, the dollar, the stock market. I'm going to give you the best price update I can. I really took some time to put my thought together on what this market is doing and why. And starting it out here with Dixie and really what Jerome Powell did last week. He basically said, look, don't worry, we're on target, inflation's transitory, and everything's gonna be okay next year. Don't worry, we don't have to tighten as much as we thought we were gonna have to tighten. And the dollar had a bit of a relief rally last week. No, the stock market had a relief rally last week, and the dollar came down significantly last week, falling from 107 all the way down to 104. And here's what we did. Following up on the monthly. So the dollar fell last week. Stocks had a rally and Bitcoin had a rally. The big question today is continuation or not. And just like last year, again, just like last year, Powell said inflation is going to be transitory. And it's just giving the institutions the opportunity to unload their stocks on the retailers, the buy the dippers, the people who just don't know that next year everything's going to be cheaper, right? And, you know, I'm not a financial advisor. I'm not giving financial advice here. I'm just going to look at what the charts are telling me and give you an unbiased opinion. So two important dates to keep your eyes on this month are going to be December 13th and 14th. December 13th, we are going to go over the CPI, and the 14th is the FOMC meeting. They're going to say, hey, 50 basis points or 75. And I do imagine if we get some kind of backlash, higher print in inflation than expected, all of a sudden that GDP that was positive and those wages that are up and all that extra spending from Cyber Friday or whatever you want to call it, all of a sudden, inflation's higher than expected. I wouldn't be surprised for the Fed to whip the hammer out and punch us with the 75 basis point rate hike. It was really interesting to see how last week all the Fed chairs that were giving their speeches were more on the hawkish side, yet when Powell came out, he was more dovish. At the moment, the dollar is putting a big bounce off the green 55. And we did call that weekly bearish divergence, targeting that green 55 way up here. And, Bitcoin really did not benefit from that decline in the dollar. And I do imagine any kind of a bounce is going to hurt risk assets even more in this type of environment. So what did I want to follow up here on the macro? We said on the 3-month, simply as long as we do not take out this green box of peace and prosperity at 103.66, I do believe the dollar will hold itself up and continue with the macro target. First target going to be 120, call it 121, and the second target 128, and that is based off of this fib retracement from the high to the low. We already hit the first target here, the 1618, and the second target, now pullbacks. And here's the thing, we can remain in a macro 3-month quarterly uptrend as long as we're closing. We put in a higher low anywhere above this 382, which is at 94 bucks. But I would not be surprised based off of the monthly bearish divergence that we called out as well, for the dollar to come all the way down to 98, between 100 and 98, sometime first quarter of next year. However, we're kind of at this pivotal moment on the daily time frame, and here's what I would say. This is peace and prosperity. This is peace and prosperity. This is death and despair for the market. So death and despair above here, above 110, because this market can go two ways right now. It all depends upon the dollar, right? Either the dollar is going to get creamed, it's going to go down. Risk assets are, going to take a leg up. And here's what I mean by that. The Dow pretty much already had its bear market rally, right? Almost made, new all-time highs, off by a few percentage points. It wouldn't be a surprise for me for us to get a bear market rally in S&P and NASDAQ also. especially if the dollar does retreat. However, if the dollar does punch back up, I would expect, this just to be a bear trap. We fall back into this channel and ultimately, continue on down the trend. In our 6-month target on NASDAQ and S&P, I'm just going to go over this because we had this 6-month bearish engulfing candle. Again, macro bearish, maybe short-term bullish, but macro, we're looking for, S&P to come down, S&P to come down to about 2,400 to 2,200. Dow Jones, if we revisit the COVID low, wow, 17,500, that would be pretty insane. Yep. And S&P, we're talking about 2,200, and the NASDAQ, we're looking at the COVID low of about 6,600. And that's off this bearish 6-month engulfing candle. So that would line up with the dollar, continuing onwards and upwards, continuing the macro bull trend, and hitting some of our higher term time frame targets of 121 and 130. Ultimate target is going to be a blow off top at 154. And we've been talking about this for some time on our channel. So that lines up with, Bitcoin putting in some kind of a macro low, closer to mid to end of next year. So remember, these higher term time frame signals take months to play out. Additionally, on the monthly accumulation distribution indicator, we did not retain a positive slope here. So giving us the bearish bias on the monthly time frame as well. And this monthly bearish engulfing candle implies continuation to the downside. And you can see the bottom side Trailing band is at about $9,000. The problem is that can take months and months to play out. So short term on the daily time frame, I'm going to put up my regular chart here and mediate this daily time frame. If the daily Stokes do cross down below 17,200, that'd be a good indicator that this is going to line up as a bit of a bull trap. We will not get the continuation up to the $18,000, $19,000 pivot. I'd mediate that with a daily closure above, even a 4-hour above 17,300. 17,300. That was a video over the weekend. What happens to Bitcoin above 17,300 on a 4-hour? I think, consolidation, a run up to about 18,120. You can see we are back into this trading range here. And if we do confirm hidden bearish divergence on the daily time frame by closing below 16,700, I would say we revisit the bottom side of the range at 16,000. If we do lose 16,000 on a daily, I'm looking for 14,500 to get hit to the downside. And that would be based off of this consolidation. I'm going to get it here. Yeah. So that would be the target to the upside, and the, really maximum target to the upside I'm looking for is around 19.5. So now's a good time to be defensive, keeping our eyes out for the upcoming economic events, the major impacts on the US dollar. The dollar really is the chart to rule them all. And I just want to remind myself and everybody here, look, the major economic events that impact the dollar are going to run this market. And look, November was the 20th consecutive month that inflation outpaced the growth of wages, which I think is actually better than stagflation, or when wages are higher than inflation. But needless to say, unemployment data last week was not supportive of the Fed's goals, right? Non-farm payrolls, they came out hotter than expected, and hourly earnings were hotter than expected. So, Jerome Powell came out far less hawkish in his tone. If he comes out hawkish in December, on the 14th at the FOMC meeting, and really, takes his belt out and slaps the equities down, who knows, right? So I think more investors are leaning on the long side of the trade right now. So that does give me the bias that, Bitcoin likely to move up to that 18.5. We also had some weekly hidden bullish divergence on Bitcoin, which to me, is this confirmed? I would have wanted to see a weekly closure above this wick. We did not get a closure above, right? We closed above the candle body, but close enough is close enough. And ultimately, even if we get a backfill down to about 16.6, 16, I don't think we have enough juice to break the bottom side of the range yet. Why is that? Open interest is currently sitting at a pretty low level. Open interest. At about 6.4 billion. I want to see a reset and us at least come back up to around 7 billion, or that's 7.6. More 10 billion before we see another major correction. So that does kind of line up for, a little bit more of a bounce. Just give me about 5 minutes. All right. Bear with me just a second here. Right now, okay, last two things I wanted to go over. So, short-term bullish, long-term bearish. Last thing I wanted to bring up here is the reminding investors and people what a recessionary environment looks like. And we'll start it out with the 2 and 10 year yield inversion. It's usually the first warning sign of a recession. Then you've got the, this was the 2 and 10 year. This is the 2 and 10 year. 2 and 10 year. The 1 and 10 year is inverted, and the 3 month and 10 year is inverted right now. So they're all inverted, and you can see it right here. I'll leave some links below if you want to read about it. But this is why JP Morgan and Goldman Sachs and even the Fed, they're saying it's like a 98% chance of a recession next year. So if the U.S. is in a recession next year, most likely, right, the rest of the world is not going to be faring too great. So, that does line up with, a recessionary environment, some type of a, Bitcoin bounce is not going to go straight down over time, but as long as Bitcoin is closing weeklies below 21,500, we are still in a macro downtrend. And, in my opinion, right, this is not how a bubble pop ends, right? We just printed 75% or 50% of all the money in the history of the world in the last 24 to 48 months, right? 50% of all the money in the world printed. Bubble is popping, right? The bubble pop doesn't end with a, 21% correction and then rally back to all-time highs. A recession doesn't end that way. And, I do suspect bottom side of the channel, rejecting the green 55, S&P and Dow Jones, if not this year, but first quarter of next year, will revisit the lows at some point, and very, very likely come much, much lower and revisit the COVID lows sometime next year. Doesn't look like it's going to happen this year. And that's why, it could line up for a Bitcoin bounce before we head down to some of the lower targets. But again, dollar below this pivot, Bitcoin takes a bounce, dollar above this pivot, back above 110, and we'll be looking for the macro targets to the downside to get hit. That's it for today, guys. Have a blessed and highly favored day. Don't forget, like, subscribe to the video, share with a friend, and take care.